Good morning, everybody. It's Christian from Serene Education with the 4 majors notes update for the 30th of May 2012. Hi, folks. 4 majors this morning, as promised, every day. And I'm going to start with the euro against US dollar, and I'll be looking at the daily chart. Thanks to all of you guys who were online last night for our webinar. Apologies for not being able to use two separate computers. We had issues. We've just moved in. Still in the process of trying to sort all things out, and we just had to iron out that thing. So thanks for your patience last night. Hope you have a fantastic evening with us. It was good to see so many of you online, and long may it continue. Euro 1265, very strong support. I did mention that we should see price targeting 1265 if and when we saw a break of the 1300. 1300, very strong support, psychological support here, that's the round number, and then we had it. A very strong support through most of this year, and we had a bearish breakout of that, and price consolidated for a couple of days. Still negative sentiment on those. You can see quite clearly in those candlesticks, testing the underside and closing way down here, very indecisive, and then she gave up the ghost. Straight away, first target would have been here at 1265. We saw that bounce to the upside all the way up to 23.6 fib. Pullback retracement area that failed to stack up with this nice bearish engulfing here. So a reattempt of the 1265 initially looked for further downside movement. So break, moved lower for a couple of days, and now we saw price reverting to the upside on Monday. However, that sentiment not really moving higher and finding resistance yet again and closing lower, and yesterday's candle pretty much pushing price to the downside. So as long as it remains below 1265 now, ultimately we should be looking at 12,200 if I'm not mistaken. Done all the analysis. 12,200 is our next port of call. So if we were to look at this as a first start of this bounce, and then this over here was the pullback, you can see that price is now sitting at 61.8 fib. So people initially took profit here, or looking for this extension would take a profit here. Break below 61.8 would see price reverting or reattempting those lows again, and we should see price moving towards at least the 78.6 fib area. So if we move out 70.6 here, 1222, and 1222 is actually our long-term support and resistance level. Okay, so see how it all plays into play. It's really quite unique. Even if I did take the fry high here, the start of this downside move over here, to get my analysis, and take it at 1265, and the bounce up to here at 1280 and change, you'll see the 61.8 is back there below, just below us. But notice where the 100% is, smack bang on 122. So you can see there's a coming together of so many of these support and resistance levels now, or fib retracement areas at a specific point, and that specific point happens to be here at 1222. So very strong confirmation that any further downside movement would target that 12,200 mark. So all you long-term traders out there, look for your entries to go long, short, and I'll see you at the bottom. Things in Europe not really stacking up. News filtering through that Spain's borrowing costs are going higher and higher and higher. How long can they keep going? This is the question that a lot of the marketers out there are asking. It's crazy. It's not good, and Spain is having a horrible time with this banking sector. Their borrowing costs seem to be getting higher and higher and higher each month, and that doesn't bode well for obvious reasons for banks. The moment your lending costs go up, it's very hard for you to get any loans, etc. like that, and that just has a knock-on effect through the economy. On to sterling. As the same with its euro counterpart, falling quite drastically over the past month. May has seen a huge fall, pretty much taking back all of April's fine work, all that hassle of actually making an attempt to break that 1600, very strong support and resistance level, a lot of consolidation for a period of months, only for it just to take it all back in one clean sweep. Lower swings going into the setup over here, saw price breaking out and heading to the upside. Breaking above the institution moving average, which happened to be quite a strong resistance level for a number of months, finding support and then continuation higher, but that just failed to materialize, and we saw price coming unstuck at the 16,300 mark. In doing so, price reverting to the downside. We were looking for price to actually make an attempt to find support at 1600. That failed to materialize, as we saw a lot of weakness going into the 1600. We might have seen this candle over here. What normally happens if you see price reverting to a very strong support and resistance level, the candle itself becomes quite small, very indecisive as we head into these areas of major resistance or consolidation. In this case, not even a slowdown, just straight into it. Huge bearish candle, not very much wick, so very decisive. And the same happened when we saw that break out to the downside. Break below the 1600, very little wick, so it's a very decisive candle. The day after that, also the same, heading right under the institution moving average. And this is stemming because word came out of the actual fact that sterling had re-entered that recession, with all that contraction that we've seen recently. Didn't bode well for the UK economy. Also, the issues still coming out of Europe still have a knock-on effect on our economy out here, and sure enough, it's taken price lower. Doing so, breaking areas of support and resistance on the way down. If you take the all-time low here in January all the way to this prior high that we saw here in mid-April, you can see that 23.6 was targeted on the pullback. Again with 38.2 was targeted, the 50%, and now we've seen the 61. Very noticeable support here. Support. And today you can see quite clearly that price is now edging lower below this 15,6,500 mark. And if that's the case, then ultimately we should still be targeting now possibly the 78.6 fib before we head towards that all-important zero line, or 100% way back here in January. So our target 1 for the foreseeable future should be here just above the 15,4,500, and target 2 would be here at 15,2,500. CTC, very importantly, all in favor. Red. Moving averages all in order, not all in order, but crossed. 20, 50, and the institution is now above price. So we should be looking for nothing more than shorting sentiment to the downside. There's no way we should be looking for any buying opportunities. We'll only start looking for buying opportunities intraday once we see price reverting back and closing higher than 15,6,500. Okay, very important. US dollar Swiss franc, this pair moving higher. You see the all-time low here in August of last year, all the way to this high that we've seen recently here at the 9,600 mark, and price has been moving higher as we've headed along into the 2012 session, and sure enough, just recently we've seen price really punching higher than the prior high, moving very strongly. A bit of hesitation as we head into the 960. However, the last couple of days have seen price hugging the upside of these candle wicks, telling us that momentum was still favoring buying sentiments. And sure enough, yesterday's candle punching through, a bit of wick on either side, but we've broken through that 960 now, and all we need to do is see price now finding support above 960, and you'll see that price will continue to move now in the direction of the breakout. CTC, very importantly, is in our favor. Blue arrow, blue candle, blue CTC on either side. Moving average, all in order. 20, 50 institution, and a lot of air in between. So a lot of concrete supporting price to the upside. So where would price likely to go to now? The all important thing is we should be looking at previously price support and resistance levels, and there happens to be one noticeable one here, just at 9,750, and then another noticeable one, consolidation bandwidth roughly around the 99 or just below under the parity at 1. So 995, or the solid line at 1, nice round number at 1, could potentially be target 2 for the foreseeable future. So what we need to see now, you can see that price is edging higher. We might see a bit of consolidation here. All we like to see now intraday is a break above the Asian high, and to see a close and to see the momentum continue to high. As long as price stays above 960, ultimately we should be looking for further continuation of upside movement. If we do see price reverting and closing lower than 960, then we should be starting to look for potentially pullbacks to occur on this pair, and if that was to happen, or close below 960, then we should be looking for targets below that. So back towards the 23.6 would be a potential target here at the prior resistance level at 950, nice round number. 38.2 around this consolidation area here at 940, 50%, which happens to tie in quite nicely with the prior resistance. So one resistance here with this tweezer top, back at the 935 and the 61.8, just below this little consolidation here above the 92700 mark. So all importantly, price needs to stay above 960 now to see a continuation of this upside trend. Break below that, we could see further consolidation, with ultimately 23.6 being targeted for the foreseeable future. So look for price to maintain above 960, get a nice bullish engulfing here, moving away from this consolidation area, a noticeable support and resistance level in the past, and we should see price moving higher. Last pair of the day is US dollar Japanese yen. Let's have a look at this pair. Price falling quite drastically over the past couple of months after making some major highs recently. We saw this massive takeoff in early Feb after fantastic non-farm payroll figures in the States. However, that's and price made a huge move to the upside, targeting the 8400, which happened to be a very strong support and resistance level over a number of months previously. So once we got to 8400, price started to slow down noticeably, showing us candlesticks like indecisive candlestick patterns, shooting stars, and these little spinning tops, dojis. Price reverting to the downside and targeting areas of price support and resistance in the past, or fib retracement areas. 23.6, found a lot of support here through that. This bearish breakout here, saw 38.2 being targeted. Price found resistance and moved lower towards the 50, however pulled back and traded higher. Notice the CTC, guys. This is the fantastic thing about the CTC. Tell us red. We still have blue here. So this pullback wasn't a genuine pullback because it was still in a negative sentiment. There was far too much negative sentiment attached to it, so there was no buying. Even though we saw this massive move to the upside, it was not genuine buying sentiment. So you would have stayed in that, and ultimately if you are looking to trade this, you want to be keeping your stops above the major highs, and they would have told you that sentiment is still looking negative. Okay, for this to be genuine positiveness, price needs to be trading at least above the 23.6 in order to be a genuine sentiment up candle. That failed to materialize. Moving average crossed over yet again, 20 and 50, and we saw more selling coming into the picture. With that happening, we targeted the 50% line, and now at the 50% line, that's brought us back towards 80. Now 80 is also a very strong support and resistance level, like 84 was. So now you have two areas of very, very strong support and resistance. So break of it, consolidation over a number of days, and then the continuation up. Here the same thing. We went into this shorting, and then we got this bearish candle below. So as long as it's trading below the 80 now, which happens to be price support and resistance, it starts to look negative. However, it consolidated under this around this area for quite some time, not really giving us any indication of what it was doing. It was procrastinating, to be honest with you, not going any lower. But CTC told us that the sentiment was still negative. Look for it. Was saying to you, listen, just bide your time, be patient. This is where it becomes very important as a trader to have the ability to be patient, to wait for price to nod its head. And we got that nod here in mid-May when we had this bearish engulfing all of this consolidativeness around the 80. Now, as anybody will tell you, if you're seeing support above a certain area, then the more likely is you're going to see more positive. If you're seeing resistance at a certain area, the more likely is you're going to start seeing the negative side. It's the same here. You can see that there's more price action recently below 80 than above it. And you'll notice that the overall trend at the moment now is negative. Okay, the CTC is negative, so everything is still pointing to negative sentiment. So we won't be looking for any buying opportunities because prices ticked all our boxes for negativity. Our CTC is in our favor. That's one tick. Consider bearish engulfing. We're trading below the 80. That's two ticks. The trend line is still in play to the downside. 3 ticks. So we're putting all those apples or eggs in our basket. And as it maintains, you can see quite clearly over the last 5 days, the price has been very, very indecisive. Very small trading ranges, spinning tops. Okay, we want to see decision. This is very indecisive. And as long as we maintain it below 80 and everything's in play for shorts, we should be looking for that bearish engulfing that's going to take us below the 61.8 to show us that momentum is still favoring short side, and we should be targeting the 100% line here at 76 for the foreseeable future. Be aware the 61.8 is still in favor as a support. We had bounced it before, so we have to see a breach of that. And if we do see a breach of that, still have the institution moving average governing long-term sentiment. We are still trading above the institution, so that's still telling us we're positive long-term. Yes, we've had a major pullback, but overall, if I just zoom out here, you can see that the sentiment for so long for this pair was negative, and now for the first time we're trading above the institution moving average. We did so not so long ago in March of last year, but this was more of a knee-jerk reaction to the Japanese government trying to intervene. Okay, so it's so important. As long as it maintains below 80, the ultimate sentiment is negative. If it gets above 80, then we start looking for possible bullish sentiment to start favoring the upside. Okay, so just remember that. A lot of spinning tops, spinning tops, spinning tops, spinning tops, spinning top. And full 4 days of spinning tops. Today, Asian session trading, going to European session, exactly the same as we've seen the last couple of days. We do need to see some sort of momentum candle. But as long as the 80 remains as a resistance level and moving average is all above price, and our trend line's still in play, then everything still favors shorting opportunities. That's it for today, guys. I hope you have a fantastic trading day. We might see another day of sun today, which makes it almost 2 complete weeks of sun, which is fantastic. But go out there, look for these trades, do your analysis, look for any market news that might actually play a role in price action. Just look at the news today. What do we have? We've got the economic barometer meetings, the COF indicator in Swiss franc today. Net lending to individual month-on-month figures. For sterling, we've seen a 0.2 difference on those figures expecting. Italian 10-year bond auction today, guys. That's going to be quite interesting. It'll be interesting to see how Italy, the bonds do sell does. So that's going to be quite interesting. That's sensitive. That's going to happen all through the day. This afternoon at 3 p.m. GMT, we have the pending home sales month-on-month figures, and that figure is a negative. They're expecting a forecast of is seeing a difference of 4%. That's quite a high one. And then later this afternoon, 4:30 GMT, we have Mr. Draghi, the ECB president, speaking. So that could be quite interesting too. So we could see a lot of volatility or speculation this afternoon as to what he might have to say. And it'll probably be all relating to Europe and in turn to Greece and to Spain in particular. A lot of issues with Spain now, with its lending forecasts are getting quite high. That's going to lead to a lot of problems, as it did with Greece. So it could be quite interesting. Other than that, make sure if you're using the template to follow the rules of the template, and very importantly, to back it up with sound money management rules, guys. Money management is paramount when you're trading. As I mentioned, I will keep mentioning it until you guys go deaf. Is the fact that if you have the best strategy in the world, but you have the worst money management in the world, you're still going to end up being a loser. You have to back up a really sound strategy with a very, very strong management plan, and it's so important. So do that for me, please. Other than that, have fun trading, and I'll see you first thing tomorrow morning. Until then, trade serenely.